The rally that we saw in financial markets in the first quarter of the year continued into April, with global equities rising over 3% in the month. The macro environment remains broadly supportive. Economic growth in certain markets is okay, but not too strong, and perhaps more importantly, inflation still remains relatively subdued. Some of the concerns around weak economic growth that we saw earlier in the year seem to have dissipated, at least for now, although we'll need to keep a close eye on the macro data that comes through in the next few months to be really comfortable that the growth environment is not too strong and not too weak. With a relatively decent macro backdrop, we can now turn to earnings and corporate profitability. Over the past few months, we've seen earnings expectations for 2019 come down, and we're now beginning to see the first results for the first quarter of the year. Overall, what we've seen is some decent results. Yes, there have been some winners and losers, but in general, corporates have done relatively well versus these reduced expectations, particularly in the US. The slight concern here is around valuation. Already we've seen a significant re-rating of some of these markets over the past few months, and we'd argue you really need to see an acceleration of earnings over the next few quarters to help drive short-term returns from here. It's also worth bearing in mind that political risk is still with us. There are two areas that we'd highlight. The first isn't new, it's around US-China trade. The negotiations there are ongoing, and we'd expect some sort of resolution in the next couple of months. We think this is an important factor for sentiment and for global growth, and it's something that we'll continue to keep an eye on. The second is around US-Iranian relations, where the US is looking to clamp down on Iranian oil exports. This could have an impact on the oil price, and by extension potentially on global growth, but also on geopolitical risk in the region. We don't expect these two issues to derail global growth, but they are risks that we're going to be keeping an eye on over the next few months. On a different note, one area of focus for us at the moment is the impact of climate change on financial markets. There are a range of ways in which we could see this happen, around the composition of indices, corporate profitability, government policy, and corporate behavior in general terms. It's not something we'd expect to have a big impact over the next 3 to 6 months, but over time, we'd really expect to see the implications of this begin to feed through in financial markets, particularly in terms of technological development, where you'd see some winners and some losers, in terms of valuation, how markets value future cash flows for corporates, and particularly perhaps in terms of regulation around renewable energy, around supply chain, around a whole host of issues that could impact companies over time.